There's an effective way, several effective ways to fight against the affordability issues when it comes to the housing market. If you're looking to buy a home, you're trying to qualify for more home, you qualify for more mortgage. There's a series of different things that you have control over to put you in a better position. We're going to cover those in a little mini series from this video on, discussing, those different individual items and how to approach those individual items to put yourself in the best position to qualify for the most mortgage at the best rates possible. This is JP from Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So one of the most powerful tools you can use when it comes to qualifying for a mortgage at all, and then qualifying for the best possible rates and terms on that mortgage and affordability on that mortgage, is going to be solid employment. We're going to quickly cover what solid employment looks like right now. It's not going to be 100% comprehensive, but we're going to still cover the base that majority of people fall into. There's going to be some exceptions and nuances, but the majority are going to fall somewhere in these parameters. Number one, W-2 income is supreme. W-2 income is literally supreme. When you have W-2 income, lenders see that as the most stable form of income you can possibly have for the most part. And the reason for that, again, is because it's fixed, and to their knowledge, unless you get fired, it's not something that can fluctuate or really be taken away from you. You don't really hear from people getting set, their W-2 income, hourly income, or salaries cut on their jobs. Like commission and tips can fluctuate, bonus can fluctuate. So W-2 income is supreme. Most lenders will take W-2 income within 30 days of having it. If you are within that industry for at least 2 years, or have at least work employment within 2 years, that means you can switch jobs and have that job for a very short period of time and use it on your application for a mortgage. When you are brand new to working all together, then you're probably going to need some time. Most employment, they want 2 years of history of any background, W-2, 1099, business, Schedule K, whatever. 2 years is the golden mark in most cases. Now, there's loans out there for exceptions. There's bank statement loans and all kind of other loans to help you if you don't have solid employment or can't easily verify your employment. But those loans have their caveats. You're going to need more money down, and interest rates might be higher. This video is dedicated to trying to get you the best loans, the least money out of your pocket, best rates possible. W-2 income is supreme. 2 years of work history is ideal or necessary in some cases. But W-2 income is the income that you can use the earliest in your work career, if you will, or when it comes to your overall work history, right? Meaning that if you want to use 1099, tip-related, bonus-related income, you need to have 2 years tax returns in those cases to use that income. If you have W-2s, again, as long as you have the work history behind it, and you can use a W-2, sometimes even the initial letter that you get, showing that offer letter that you get, or, within 30 days or so, you can usually use that income. Meaning that you also can get a part-time job for W-2 income if you need to inflate your income to help you get a qualify for more mortgage as well. Again, because you may have, that 2 years work history behind you, and then you pick up a W-2 job within 30 days or so, you might be able to use that income towards your mortgage application. Check with your lender, but in many cases that could even work if you're looking to kind of blow up your affordability. 1099 income is not as well received. And something important, again, 1099, Schedule Ks, all of that different stuff, tips and bonus related income, all needs 2 years verified on tax returns. Another big thing is changing employment types. Fields are important, changing fields, and then changing like tax status under your employment, meaning going from W-2 to 1099 or 1099 to W-2, right? So if you go from 1099 to W-2, then that's great, because you're going from what is perceived to be more unstable income to a stable W-2 income. You go from W-2 income to 1099 income, self-employed, whatever the case may be. Now you're shaking up the apple cart, and you're going to probably have to wait 2 years on that new income stream to be able to verify it on taxes, meaning that you push that clock way out by 2 years. If you want to take back control and you need to try to stay in one industry, you don't have to stay at the same job, same employer, but one industry for 2 years or more, and you want to stay within W-2 for 2 years or more, ideally, or if you're going to switch from 1099 to W-2, but you need to have a solid work history. So again, this is one of the most important. You can have great credit, good money in the bank, good down payment, good reserves. If you don't have stable job income, stable verifiable job history, none of that other stuff's going to matter. It's not going to get you over the hump unless you do some kind of private loan, bank statement type loan, something like that with a lot more money down and potentially a higher interest rate. So again, my goal is to help you get into a home with as little money down as possible so you can use that money to actually go invest and bring in more income instead of tying it up in your house, because you can't use that equity without making it a debt again, a loan, or selling the property. So I recommend going into homes with low cash as possible, best rates, best terms as possible, and having stable, verifiable income is the best way to do it. Play this video back if you need to catch up on that and figure out where you fall, because I'm telling you, this is going to be extremely useful, and many lenders don't tell you this until you run into it in underwriting. So I'm giving you some heads up ahead of time. Thank y'all for tuning in. I appreciate bringing y'all this content. As always, it's home buying season at the time of this recording, or it'll be home time buying season again whenever you're watching this. Put yourself in the best position possible. Thank y'all for tuning in. As always, stay focused, stay in motion. See y'all soon.